A big day on Wall Street, at least for two of the three main indices. The Dow jumped more than 800 points for its best rally in months, although it closed well off its high after a late-day sell-off. The Nasdaq did drop 181 points, and the S&P added 41 points. What's behind these numbers, though, and what does it mean for you and your money if you are connected to the stock market? Joining me now is U.S. markets expert Scott Shellady. Scott, thanks so much for being with us. Let me just start with the attire, sir. Just give me a brief explanation. We'll get to the stocks, I promise, but this, I must acknowledge the attire, sir. Explain it for me.
Well, for the last 20 years, I've got the brand. I'm the cow guy in the financial markets. We've got a family farm where we milk, 150 head of cattle twice a day, and I put this on when the markets got busy, and everybody liked to see it, and now they come to me to ask me questions now. So it's something that my dad started and I carried on with. So that's it in a nutshell.
I love it, man. And speaking of questions, let's get into it. Exactly what did you get from the stock market report today? 800-point bounce at the height was certainly a nice thing to see. Was this more the market reacting to the election or reacting to the news from Pfizer about a potential highly effective vaccine? What's the main driving force here?
Well, just in a nutshell, we were up about 200 points before the vaccine news came out, and then we went up almost 1,800 points. And so we paired more than half those gains going home. And then really that's just down to this. People got overexcited, out over their skis. Yes. Is a vaccine great? Absolutely. Is it the answer? No, it's part of the answer, right? Because we've still got a lot of Americans that are still scared and don't go out of their houses and haven't been to a restaurant. And that's the problem. We've got a psychological deal on our hands. Even though we've given them money and now we've given them a vaccine, we've still got a long way to go to heal the psyche of the country before that economy really comes back to where it was.
Do you expect more volatility between now and, let's say, inauguration?
Yes, because we still got, you just mentioned on your show, the Attorney Barr, with his findings, there's going to be a disputed election, whether or not people talk about it. So that's going to be volatile. You're going to see more and more of the vaccine news come out. That's going to be volatile. So going into the end of the year, you might have people want to get out of their positions. That'll be volatile. So this is setting up for also a difficult time because of the economy is getting better, but at a slower rate. So even though it's getting better at a slower rate, that means people out on Main Street are going to be suffering as well. And all those restaurants that I'm sure you know that have been closed down, the threat of a lockdown here in this country, we've seen them happen in Europe, threat of a mask mandate in this country. So yes, volatility is here to stay.
And Scott, in 20 seconds, real quick, half this country has nothing to do with the stock market. So I think that's always important context when we have financial analysts on. The Dow going up or down means nothing to half the country, roughly. What, for those people who are not invested in the stock, no 401k or what have you, what barometer should they and we be looking at to see if this economy, how fully this economy is recovering?
Well, you want to put people back to work and you want to see how much money they have in their pockets. That's the real deal. And we've gotten a lot of those jobs back that we lost in March and April, but we're not there yet. And we still, again, we have a psychological problem on our hands because people got so beat up and so afraid of the disease or the virus. And so I think that you need to really keep an eye on the jobs, the weekly jobless numbers. That's going to give you a good barometer of where the economy is because that's going to be money in people's pockets. And that's what's going to drive the economy forward. So I'd say for every 1 month we lost from coronavirus, it's going to take 3 or 4 months to heal for every 1 month.
All right, Scott, thank you so much for joining us. Appreciate your time, sir.
All righty.